trillion gone. Not over a decade, not over a year, but in just weeks. Bitcoin is bleeding. The market is shaking. Investors, some of the biggest in the game, are running for the exits. And the meltdown that began in early October is now spiraling into one of the deepest crypto downturns in years. But this isn't just about price charts dropping. This is about liquidations no one thought possible, whales dumping billions, institutions stepping in, and a growing fear that the bottom still isn't in. This is the instant angle. And tonight, we break down how $1 trillion crypto wipeout unfolded, and why the story isn't even close to over. It started like any other chaotic, high-volatility crypto week, until October 10th. Nobody saw it coming. 1 minute, the charts were grinding sideways, the usual noise of a restless market. And the next, a shockwave ripped through the entire ecosystem. Screens went blood red. Order books evaporated. Candles didn't fall. They collapsed, like cliffs shearing off into the ocean. And in the span of a few breathless minutes, more than $19 billion in leveraged positions were liquidated. But that was just the conservative estimate. Behind the scenes, analysts whispered a far uglier truth. The real figure may have been closer to $30 billion, the single largest liquidation event in Bitcoin's history. Before the crash, the crypto market cap sat at a confident $4.2 trillion, a sign of strength, momentum, optimism. Fast forward to today, and it's limping below $3 trillion. That's $1 trillion gone, erased faster than any wipeout this space has ever witnessed. Not in a week, not in a day, but almost instantly.
Since the beginning of October, in just 41 days, Bitcoin has plummeted 27%, entering a technical bear market. For the first time since April, Bitcoin plunged below $92,000.
Investors braced for a rebound. It never came. And by Thursday, the bottom kept dropping. Bitcoin slid to $86,398, a brutal 31% collapse from its early October peak above $126,000. And then came the line no one expected to read in 2025. For the first time this year, Bitcoin is officially in the red. A psychological blow, a turning point, and for many, a sign that this isn't just another dip, it's a reckoning. You'd think after a wipeout like that, the worst would be over. But the opposite is happening, according to a report from 21 Shares.
There are the sellers, which are these mega whales who are likely Chinese miners. We have data from CryptoQuant showing that while ETFs and corporate treasuries have been big buyers this year, that's mostly being almost perfectly offset by the selling by bigger whales. So check out buying from wallets with 100 to 1,000 Bitcoin. Those are likely the ETF wallets as well as corporate treasuries versus selling from the over 1,000 Bitcoin and over 10,000 Bitcoin cohorts. So this, Scott, is one reason Bitcoin's price is stuck. It's evidence of a big shift in ownership in the Bitcoin market. Retail, so under 1 Bitcoin for what it's worth. Those are sellers too, but they're kind of an insignificant cohort at this point, unlike in previous cycles. And it could mean we see traders adopting more sophisticated options-based strategies or turn to proxies and treasury companies.
Long-term holders sold 42,000 BTC this month, over $4 billion. Bitcoin ETFs saw 3 straight weeks of outflows. And Thursday alone, a record-breaking $866 million in redemptions, the second largest outflow day ever recorded. This isn't panic selling by small traders. This is big money exiting fast. And behind the scenes, macro pressure is building. Market liquidity is thin. Forced liquidations continue. And Fed commentary is lowering expectations for rate cuts, hurting all risk assets, especially Bitcoin. As one strategist put it, the burden of proof is on the bulls. Nothing captured the mood of the market more than what happened this week. Early Bitcoin adopter Owen Gunden, a name whispered in crypto circles, finished liquidating his entire position. All 11,000 Bitcoin, sold over 30 days, worth roughly $1.3 billion. The final transfer? A clean 2,499 BTC, about $228 million, sent straight to Kraken. Blockchain tracking firm Arkham mapped the entire sell-off, describing it as one of the most structured, deliberate exits they've ever seen. Gunden was there in the early days, trading across TradeHill and MT Gox long before the collapse in 2014. His fortune, once legendary, now sits around $561 million, enough to make him the 8th richest person in crypto. But today he's out, entirely, and his timing? Perfectly aligned with the market turning deeply bearish. But here's the twist. Just when it looks like everyone is running for the exits, someone else is quietly walking in. As whales dump billions and long-time holders abandon positions they've held for years, institutions are doing the exact opposite. They're buying. US spot Bitcoin ETFs just crossed 40% institutional ownership, a massive jump from 27% back in Q2. And keep this in mind, that 40% only reflects firms managing over $100 million, the ones who are legally required to file disclosures. Smaller funds, family offices, and private desks aren't even counted. So the real number? Almost certainly higher. It creates one of the strangest market moments we've seen in years. Retail traders are terrified. The whales who built this ecosystem are heading for the door. But institutions, slow, strategic, and notoriously patient, are quietly accumulating. It's like watching a battlefield split down the middle. On one side, panic. On the other hand, preparation. Two completely different interpretations of the same market. Two different timelines. And absolutely no consensus on where the bottom really is. Some say this is the smart money buying blood in the streets. Others say it's the calm before an even bigger drop. Right now, the only thing everyone agrees on is that the divide has never been wider. CryptoQuant's Bull Score Index just dropped to 20 out of 100, a reading that signals extreme bearish sentiment. The charts look bad. The mood looks worse. And yet, in markets like these, reflexive rebounds often hit when no one expects them. But make no mistake, this is a fragile market, and uncertainty is now in control. Is this the final flush before recovery, or the start of something much deeper? For now, all we know is that $1 trillion has disappeared, and the story of this crash is still being written. This is the instant angle. Stay sharp, stay informed, and we'll see you in the next one.